What's going on, money lovers? Welcome back. So today we're going to be discussing NIO stock, ticker symbol NIO. I truly believe that this is the second best electric car company that you can buy right now. Investing in NIO right now could be like investing in Tesla 5 years ago. Now, it's an investment that is not without risks, and I've gotten some flack for talking about Chinese companies lately. I've been referred to as a Chinese Communist Party supporter, so we'll address that in a second. So there's that. The only Chinese stocks I own are NIO, and I recently just started a position in Alibaba, and they're very small positions in my overall portfolio, and I plan to keep it that way because this is not an investment without risk. And when investing in Chinese companies, there are extra risks to take into account. Especially as of late, Chinese companies have really fallen out of favor, but I do think that there's an opportunity with NIO here. So we're going to look at their earnings report. So before we get to NIO's earnings report, let's quickly look at InsideEVs.com for some statistics on EV sales year to date and a quick note on emotional investing. You can see the top selling models year to date. Tesla's far outsold the competitors, but NIO does belong on this list as well because, as we'll see in the quarterly report, if you add up Q1 and Q2, NIO has sold over 40,000 vehicles this year so far. So we're going to primarily be looking at the NIO earnings report today, but I do want to address this whole rhetoric of, not being able to invest in Chinese companies. There is merit to it. Don't get me wrong. I agree with that, but I just think it's worth taking a look at. I can make a whole video on why you should not get caught up in emotional investing, but this all started when I commented on the finance channel. Great channel, by the way. Check this guy out. Dan, he's great. Especially if you're interested in Voyager Digital, he does a lot of coverage on that company. I like that company a lot as well. I've made a video or two on them in the past. So I commented, just start a position, blah, blah, blah. This one, Maxwell comments, another CCP lover. Bruh. So we exchanged insults for a little bit here, and then he wanted to bring up there are a lot of good stocks to buy without being unethical, and this is where it gets dangerous, and I'm going to totally destroy this argument of emotional investing. You would not buy Philip Morris because it will go up, right? To which I responded, actually I would. Should I not buy Apple because people stare at iPhones all day and become addicted and depressed? If you do not take emotion out of investing, it will go poorly. I think it's just very dangerous when you take this pontifical approach to investing. Now, because all of a sudden you could rule out every company. I should make a whole video on this, but think about it. So I'm not going to invest in any company that has any negatives. Well, there goes Apple. Let's see, what about Coca-Cola, Pepsi? No, those companies cause obesity and illness. Okay. Maybe some restaurant place. McDonald's, nope, can't buy that either. Too unethical. I think it's a very dangerous way to look at things. And yes, there are risks that come with investing in Chinese stocks, especially as of late when the government is just interfering with all these big tech companies and they're really hurting some of their best competitors. But I do like to think this will all blow over. But even still, you should be aware of that risk. And that's why I'm not making NIO my top holding. This is a company that makes up a couple percentage points of my entire portfolio, so it's not a big deal. This is money that, if it goes south, I'm taking a calculated risk here. Be greedy when others are fearful, right? So anyway, let me get off my TED Talk podium and get to the NIO second quarter earnings report. So they delivered almost 22,000 vehicles in Q2, brought in $1.2 billion of revenue in US dollars, an increase of 127% from the second quarter of 2020, and it's almost 7% increase from the first quarter of 2021. Vehicle margin was 20% compared with a little under 10% year over year. Gross profit, $243 million. Year-over-year increase of 400%. Now, when you're ramping production, when you're earlier along in the journey, you're going to be losing money because obviously it costs a lot of money to just get things going. We saw this with Tesla. They almost didn't make it, but they persevered and they made it through. So again, they're not out of the woods yet. They're really just getting started and they're in the trenches right now. But it is good to see that their loss from operations of $118 million was down 34% year over year. So maybe this company is heading toward profitability. Net loss, $90 million, decrease of 50% year over year. So if they continue on this path, they will become a profitable company, but a lot can still go wrong. Some words from the CEO, William Li, who is also the founder and chairman. So we aim to deliver 3 new products based on the NIO Technology Platform 2.0 in 2022, including ET7, a flagship premium smart electric sedan. So it's interesting. They do seem to be following the roadmap that Tesla laid out, where you start with these premium luxury vehicles that you sell at a higher price point, and obviously you're appealing to a niche market there, and we'll see what happens. Maybe one day they do go to mass market. As the EV adoption begins to reach a tipping point worldwide, we believe it is imperative to speed up the launch of new products to provide more premium smart EV offerings with superior holistic services to the growing user base in the global market. So if we take a look at their balance sheet, and remember, this is unaudited, this is a risk. It's not subject to the same stringent requirements US companies are. So just take this all with a grain of salt. I will give the people who think I'm a CCP lover that. So if we look at in US dollars, this last column here, as of June 30, their total assets in US dollars is a little over 10 billion, and their total liabilities is around half that, a little over 5 billion. So it's a healthy ratio. And again, I am trusting them here, but a lot of people are skeptical of that, and that's understandable. I mean, people have gotten burned on many of these Chinese IPOs. Look at Lupton Coffee the last couple years, companies like that that are just cooking the book. So you have to be careful. I'm not saying that you shouldn't be. Now, this company is still losing money, but like we saw with Tesla, it took almost 2 decades for them to become profitable. So this is to be expected. And again, you're early in the game here. There's higher risk, but there's also higher potential reward. They had a net loss of 90 million. So just keep that in mind. This is a company that's on the right track, but they haven't 100% proven themselves yet. So it is not without risk. This is a very risky investment, but I believe I'm taking a calculated risk here. As I said, very small portion of my overall portfolio, and they're selling vehicles. That's a lot more than a lot of these other EV companies can say for themselves. They're selling a good amount, 40,000 so far year to date, and increasing those numbers rapidly year over year. So you're investing in the growth story here. So I do believe that there is a great opportunity here. You know, this is a company that's growing very quickly, and if they can continue on this path, they will be profitable very soon. And they could even be a, you know, top competitor to the likes of Tesla. If you just look at their website, it's a very similar company to Tesla. They have a lot in common. They're doing a lot of similar cool things. Where they differ with Tesla is that they are in favor of battery swapping, so it'll be interesting to see if they can make that work, because, you know, Tesla tried to and scrapped it pretty quickly. But who knows? Maybe the way China is set up, denser population bases, it makes sense. It could be a lot harder to have charging stations with enough capacity to charge all these cars at once, versus if you're in the city, you know, you just pull in, you swap your battery, you're in and out quickly. Maybe they can make it work. This remains to be seen, but I think it is very interesting that they're going with it. So let me know what you think of NIO in the comments below. Do you own NIO stock? Why or why not? If you enjoyed the video today, please don't forget to like, subscribe, and hit that notification bell. This is Vinny from the Investment Club, and I'll see you next time.